Hello, fellow Earthlings, and welcome to the Space Times podcast. I'm Harrison Lambert, here with Paul Mayer, excited for a very special episode of the Space Times podcast. We have special guest Andrew Parlock here from Space Phoenix Systems to talk to us more about in-space manufacturing, which is a main topic on our podcast this week, along with orbital congestion, rockets, and our standard assorted business moves and technological advances. We hope you enjoyed this week's episode. Drop us a comment, check out our socials, and please follow us on Spotify, Apple Podcasts, YouTube, or wherever you're receiving this signal. Starting off the year strong is a fairly novel market in the space industry, and that is in-space manufacturing. It is one of the newer markets as opposed to things like communications and Earth observation, but it's been having a great year last year, and just within this past week has had a great start to 2026. We had a chance to sit down with CEO of Space Phoenix, Andrew Parlock, to dive deeper into this topic, as we've seen some impressive moves just in this first week from companies such as SpaceForge, Ombra, and of course, Space Phoenix. SpaceForge said December 31st that it was able to generate plasma aboard its first satellite, Forge Star 1. This is a satellite that was launched into low Earth orbit in June 2025 and held a furnace on board capable of generating materials for semiconductors. They reached 1,000 degrees Celsius, which is a record for on-orbit furnaces, and enables them with critical capabilities for manufacturing materials such as gallium arsenide, silicon carbide, aluminum nitride, and diamonds. These are important materials not just to semiconductors, but other technologies such as power converters, solar panels, communications technology, as well as some quantum applications. We've seen some uses for diamonds in quantum inertial sensors and quantum communication devices. So this is a huge step forward for the entire industry of in-space manufacturing. It really enables one of the key capabilities that this market has been pursuing for a couple of years now. So love to hear this from SpaceForge. Ombra, in collaboration with the University of Texas, announced that it has been selected in $180,000 STTR Phase 1 contract to create biomanufacturing for space technology and resource utilization, aka their BioStar project. This BioStar is an anaerobic bioreactor. It is designed to produce methane in space. This would be extremely useful for generating fuel on orbit rather than having to launch it up, which the laws of physics means that we burn through a lot more fuel than we're able to get into orbit. So this unlocks key capabilities for interplanetary travel and just long-term habitation of space. This contract could allow them to build out other capabilities of biomanufacturing, but this seems to be their main focus. We've seen some articles recently and talked about recently companies like Solar Food, who are working on other biomanufacturing capabilities, and Lambda Vision, who's working on growing human tissue in space. So there are plenty of other biomanufacturing efforts going on in orbit, but for Ombra, it seems they're focused on this fuel production capability.
Yeah, it's neat to see both the bio aspects, biomechanical and pharma side of things represented more by Ombra and the pharmaceutical industry, and SpaceForge, which is building a plasma furnace for specifically sort of on-orbit welding and an assembly of metals and aluminums, and much more sort of traditional view of manufacturing. It's interesting to see how both of these are sort of developing in parallel.
Yeah, I mean, they're two of the most cited and pursued applications of in-space manufacturing, one being biopharma. It's a little bit more accessible. It's been done this past year about 5 times by Varda with their Winnebago spacecraft. The other application being silicon applications such as computers and solar panels, which I think has broader implications for the growing demand for those kind of capabilities on space. So, huge steps on both fronts. But we're really excited to announce Space Phoenix's raise of $7.5 million in their seed round of funding, and the announcement of a partnership with the customer Flawless Photonics for another application that's fairly popular in this space, being that of fiber optic cables. So all these applications silicon, biopharma, fiber optics, they all benefit from the fact that microgravity induces less defects into the crystal structure, whether it be biological or chemical. And we're so excited to be able to sit down with Andrew Parlock and talk to him about how their business is going to deploy these funds to execute on customers like Flawless Photonics and be ready for their inaugural launch next year.
Q2 of 2027.
Yeah, Q2 of 2027. So we're going to cut to the interview with Andrew Parlock now. And when we're done with that, we'll jump back into our regularly scheduled podcast. We are pleased to have our guest, Andrew Parlock here, CEO of Space Phoenix Systems, a company working on in-orbit manufacturing and return vehicles and the logistics surrounding it. We're excited to dive deep into his business, how he plans to approach this market, and get some insights into the overall patterns we're seeing in the space ecosystem. Andrew Parlock, it's a pleasure to have you here.
Really great being here.
So to start off, Andrew, can you kind of tell us a little bit about your company?
We're logistics for space, right? We get stuff into space and back. We're the box man. We're the delivery vehicle. It's a gaping hole in the market. There's not a lot that really want to manage that logistical backbone of how we're going to get to space, complete a mission, and return. We make accessing space simple, and we believe that concept is revolutionary, right? That's our tagline.
So Space Phoenix is you're positioning yourself to be sort of the go-to logistics solution for end customers.
So the model is really one, you're correct in saying throughput, but it's an up and back throughput. You look at some of the biotech folks. The biotech folks, they want to be up in space anywhere from 7 to 10 days, right? Because their regions grow and then they die. There's a like ideal spot. So space, we have a lot of biotech folks that have come to us and said, "Can you stay up for 10 days or less?" And we said, "Sure, no problem." Right? That'll be, not only can we stay up for 10 days or less, but I'm going to give you a discount, right? Because for me, I get that spacecraft back, I get to refurbish it, I get to put it up again. I'm going to give you a discount if you only stay up for 10 days. The majority of our customers that we're seeing right now, they really want to be up anywhere from 6 weeks to 3 months, 6 to 12 weeks. That seems to be the sweet spot. And that'll be kind of normal pricing. Go ahead, Harrison.
Is that a number you have any control over? Like, could you launch smaller payloads if you're trying to decrease the duration on orbit?
Yeah, I think we probably could. But our model, the Hermes Beta, which this is a little bit of an older version, but the Hermes Beta will have 60 kilograms of payload. The goal is every time a Hermes Beta goes up, whether it goes up for 10 days or 10 weeks, that it has 60 kilos of revenue generating payload on board. Right? That's the model. However, you hit on a really interesting point. There's going to come a time, if we're going to be rapid cadence on demand, there's going to come a time when a Hermes spacecraft may only have 47 kilos of revenue generating payload. But we've got to meet the customer's schedule. We've got to meet the cadence. We've got to meet the rocket launch, right? So these things are going to happen, but these are questions that a lot of folks in the industry haven't asked yet.
170 kilograms puts you in that small launch capacity,
right,
which opens the door for pretty much every launch vehicle out there.
The goal always was to be able to put 2 Hermes on a Espa Grande. I don't know if we'll get there. Maybe we will. That would be the dream. That's the most efficient way to launch, like on a Falcon 9 or a transporter. One of the things, remember, we got Phoenix Hermes Alpha, Beta. There'll probably be a Gamma, maybe an Epsilon. I don't know what comes after that. The premise of Space Phoenix was to be robust, repeatable performance, right? We get asked a lot, what's the IP? What's your IP? What's your IP moat? A lot of investors want to know what your IP moat is. So guys, we have a $13 trillion problem in front of us. And we've got a handful of companies at best that are managing it. This is a capacity issue. So specifically with Hermes Alpha and Hermes Beta, this is about getting to market, making sure that our customers can get into space, complete their mission, and get back. As we get to Gamma, we'll start to refine the mission a little bit. We'll probably refine the masses a bit. as we get to Phoenix Athena, which is our next generation spacecraft, much, much larger spacecraft, 550 to 650 kilos, we'll refine that even more, and it'll look quite a bit different. It'll have more capabilities. But right now, man, I mean, think about it. The International Space Station will retire with over 750 microgravity experiments that will never see the ISS. Scheduled, funded, ready to go experiments that can never get to the ISS. So we've got this massive capacity constraint, and that's really what we're trying to solve right now. You know, one of our customers, Flawless Photonics, great customer. We're going to be making an announcement with them first of the year, a little bit of a press release out there to market. You know, their initial experiment, production experiment, will be about 45 kilos. Fits perfect on the Hermes. Great experiment. But as they get to manufacturing at scale, right? And this is what we just talked to NASA about last week, as a matter of fact. The week before Christmas, we sat down with some pretty high-ranking folks at NASA. It's about microgravity manufacturing at scale. It's no longer about fundamental research or fundamental development. We got to get to scale. And to scale means larger and larger payloads. They're going to have more and more power, more and more thermal demands. So we're seeing that in the market. I think Space Phoenix is uniquely positioned right now to have this fleet type approach where we're starting small. Hermes isn't going anywhere. That Hermes class of spacecraft will stay there for a very long time. But then Athena, and then just beating the Greek myths up to death, the Zeus spacecraft, which will come a little bit later, they'll move as the market moves. And I think that's important because a lot of folks have made bets that the market is going one place or another, but it's not there yet. We've bet small and developed a roadmap to get bigger.
How are you sort of pricing this to your customers? Is it more of a price per mission, or is it based more pricing per kilogram of payload that you're hosting for them?
If somebody comes to me and says, I need to be up in 47 days, it's a different price than somebody comes to me and says, I got 12 months to wait, right?
Right.
We're gonna move to some of that. We're working a lot with a company called Space Commerce Matters right now. We're doing a lot of work with them on a company led by Cindy Butow. Cindy Butow has the title of being the person that helped commercialize the ISS back 2009, 2010. Amazing woman, amazing company. But they're helping us do a lot of work around what does that pricing look like? Nobody can answer that question right now. SpaceX, they say, hey, it's going to cost you $165,000. That gets you up and back, right? But now we got to think about power, data, position, orbit, where you want to return, how long you want to be up.
So kind of to that customer base, I know you mentioned that the ISS has a backlog of about 750 projects. And you've recently added the former science director, Dr. Rose Hernandez, to your leadership team. So how much of that business do you think you'll actually be able to capture? And do you already have an idea of what proportion of those you could convert from research projects to actual products?
You know, we're hoping to convert a lot of it. You know, I can't really say. I will tell you this: 100%. As a matter of fact, I got off a conversation before I got on this conversation. 100% of the companies that we have spoken with have signed up for our service, have signed an LOI. We are, I think, 15 for 15 right now, to the point where we're almost sensitive to go to the market right now, because if you look at our planned capacity, we're basically at capacity through 2029. So
that's a great problem to have. Congratulations.
It's a great problem to have, right? But it's also better execute, right? Better execute.
Just walk me through, coming from your background at Space Forge and ICEYE, what sort of inflection points, what sort of growth have you seen in the industry overall that gives you confidence that, hey, this is where we're headed in 2 to 3 years' time?
For Space Phoenix, it's been part of our ethos from day one, that We are going to let others do what they do best, and we're going to support them. I tell two stories all the time. One was at a biotech company. Met with them. They're actually a customer of ours now, called Estra Biotech. Um, they came to us and they were concerned about building. You mentioned it before, Paul, the NRE. How do we get a space payload up? And they had been up to the ISS multiple times. I think 3 or even 4 times. And they're trying to cure cancer in space. They're making cancer therapeutics in orbit. And, the statement from me to them is, hey, I don't know how to cure cancer, so why don't you manage that, and we'll manage the spacecraft part of it. I had another. They're not a customer yet, so I can't say their name, but they will be. A biotech company I met in Puerto Rico. I spoke at the Space in the Caribbean Summit this past October. Great place to go do a conference. But this little biotech came up to us and they were really bragging. They got this really, really interesting biotech where they're making pharmaceuticals in space, and then they're building a spacecraft. And I looked at them and I go, "Why are you building a spacecraft?" And they said, "Oh, because," and they have no answer. The answer is, well, because there's no Space Phoenix out there right now. United Semiconductors, they've already come to us and they said, "Listen, we've got 26 missions to move this to scale so that we can start selling the product." Well, we know the inevitable conclusion here. The inevitable conclusion is that United Semiconductors gets purchased by Micron or Intel, right? And Intel just starts doing manufacturing of this particular style of semiconductor material, right? And that can't be done on Earth. But we don't even talk about it anymore. We just talk about the fact that we have GaN at scale, we have IAN at scale, right? We're not talking about, oh, hey, this particular semiconductor was made in space. Maybe on the back of your cell phone you say, made in space or something like that, right? But in the end, our future customers are going to be, Intel in the Micron, Pfizer, Bristol Myers Squibb. I mean, it's going to be the manufacturers of today. Like, it's not going to be in space manufacturers. It's going to be manufacturers, right? That's where we're going, and that's where. Oh, by the way, that's really where we need to get to.
Yeah, I was going to say that because I was really impressed by the leadership you've assembled already, and it's early days for your company, but I think it really reflects a strength in business leadership, which, as you're saying, like, your company is going to primarily be about the business and less about the tech. And I think that makes sense if you look at a lot of who you're comparing to, FedEx, UPS, like these logistics services. A lot of what would be considered their moat is really just good business, like having relationships, having a good customer experience. And I see that a lot with even space integrators in current space industries. The ones that are succeeding are the ones that make it pain-free for their customers, that have happy customers in the end.
We got to make this frictionless. I need a customer to come to a web kind of interface, click, 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 click. Here's their price. Boom. I send them a 152 line checklist. They got to do all these different things. I offer them a consultant to help them walk through it. Costs them a little bit of money, but it doesn't cost them a lot of money. Failure is definitely more expensive than that, right? I walk them through. I hold their hand. We give them lots and lots of options, right? This is where we need to get to. We've got to get rid of the friction. If we're going to get to manufacturing at scale, at cadence, and really solve the problem. If we're going to solve the problems we claim we can solve, we got to eliminate the friction.
And do you see what are kind of the friction points that you're focused on right now?
Well, the big friction point is, people going out there building, they think they need to build their own spacecraft, or they think they need to know everything that they need to know about space qualifying their payload. We're trying to eliminate that friction. We're trying to take the burden off. I was just talking to, again, this space-based cosmetics company. And oh, by the way, we agreed to sign an LOI. We're going to do a big announcement at the end of January. So
Awesome.
again, we're 100%. We're batting 1,000. But I looked at the founder, and I said, she said, oh, we're looking at different launch options. I go, why? Why are you looking at different launch options? And she looked at me, and I could just see the pain in her eyes. I mean, she's a cosmetics person, and been wildly successful, by the way, wildly successful. I said, and she knows that space can solve some of these intractable problems, crystal growth, and so on. But then she's burdened with these other things. So if I can eliminate that friction for her, I've got a customer for life. Oh, by the way, what they're trying to do is they're trying to build the lab so that other folks, they're trying to do what we're trying to do. They're trying to eliminate the friction for other folks to manufacture in space so that the process and laboratory will be there. We'll fly the lab, but other customers. So you can quickly see it, moving down the food chain.
Yeah, cascading value to your customers.
Yeah, that's it.
I would imagine that I would imagine that the customers that you're able to your beachhead customers and the customers that you're able to solve these initial pain points for are, to your point, customers for life. As sticky a customer as you can have. That
exactly.
Hey, Andrew solved this problem. I don't care what anyone else says. It's worked. We're not fixing it ever again. I would imagine that's the mentality.
Yeah, with A, and number two, like we want to drive more value for them. I don't want to say, oh, hey, I'm making numbers up now. I flew your payload for $1 million. In 2028, it's going to be $1.2 million in 2029. I want to turn around to them and say, oh, it's 800,000, and I want to keep driving the cost down. I want to keep making it that much more sticky. But you're exactly right, Paul. I mean, these customers, they're going to be sticky for a long, long, long time.
If I'm not mistaken, I don't want to speak out of turn here, but you're currently term sheets in hand. You're currently sort of wrapping up and finalizing in the last stages of finalizing your own, I believe, seed round raise, correct?
Yeah, we've got 7.5 million of term sheets signed. We've got commitments, verbal commitments for another, 3.5 to 5. Verbal commitments are great. Term sheets are better. Checks in the bank are best. Checks in the bank that you can draw upon are definitely even better. So we're still accepting investment.
Well, congratulations on the great news. I mean, I know there was a number I'd seen that like 10 million was kind of your target for your first mission. So now that you have that in hand, what is kind of your plans with this money?
So one of the things we're doing is what we call Project 100. It's out there. It's on our website. Project 100 is probably the most exciting thing going, and it will be a single Hermes Alpha that will go up on day 0, complete a short duration mission, come back down, go through a little maintenance cycle, pull the payload out, put a new payload in, launch again, and come back. If we can do that, then we've kind of proven the rapid cadence, low cost, on demand model, right? Don't talk about it, got to be about it, right? So Project 100 is really exciting. 26 is going to be an exciting year for Space Phoenix. It's just going to be really exciting. We're putting our first reservations down for our launch in Q2 2027. We're starting to talk to production or contract manufacturers for this stuff. We've got, the team is growing, investments coming in. We're also doing some interesting stuff around debt financing, another effort that Stuart's been part of. But it's interesting. You've got this fleet of spacecraft that are reusable. Well, that's an interesting model. We can start to debt finance those spacecraft and lease them back to the company, right? Akin, again, I've mentioned it several times in this conversation, akin to the commercial airline industry, right? United doesn't own their planes. They lease their planes from United Airplane Leasing. or whatever it's called, right? There's an interesting model there where we can be very capital efficient. And that's one of the things that smart people like Stewart, smart people like Frank Johnson in the background, Mike Larkin in the background are helping us be a bit more capital efficient with our money. So that's a big deal and something that we're able to do differently because we are different. So that's of it. But 2026 will be exciting. A lot of international stuff happening in 26. 2027, not our first launch, but our first 3 launches all happen in 2027. And then 2028, we go into production. I mean, not production. We go into production with Hermes Beta in 27. Hermes Beta launches in 28. We go right to production. We're not waiting.
No, it sounds like you have a great year ahead of you, and we'll be here rooting you along and
Awesome.
excited to see what happens. But before we kind of wrap up this conversation, I wanted to give you a chance to kind of restate the thesis of your company. Tell us what you need right now, whether it's funding, hiring, more customers, and anything we can do to help or our viewers can do to help.
3-year contracts with revenue reservations. That's what Stewart says. I agree with him, by the way. Yeah. So the thesis is simple, on purpose, and it's our tagline. We simplify accessing space, and we believe that concept's revolutionary. We're your logistics provider. That's it. We're the unsexy part of space. We don't want to do the rockets. We don't want to do the payloads. We want to be the middleware that makes it all possible. That's definitely the thesis. Simplification, removing the friction, getting rid of the burden, whatever you want to say, but that's the thesis. What do we need? We're going to be hiring. The company will more than triple in 2026. So definitely hiring. The business model is important to hammer home also. This is one of when we remove the burden of the spacecraft, or we remove the burden of space. It's about a lot of people say, "Oh, you're third-party logistics." Yeah, we're white glove third-party logistics. That's an important thing. We're going to manage it all the space aspects of it. We're going to pick your payload up. We're going to get you integrated onto a spacecraft. We're going to manage the launch. We're going to get a company to integrate you to the launch vehicle. We're going to manage the operations in orbit. We're going to get you back down. We're going to manage the recovery, and we're going to deliver the final product to you. So that white glove service is a game changer. It's just it's something different. Harrison, you asked several times about the moat. That will represent a moat of customer service that a lot of companies don't even talk about right now because space is so hard. Nobody even thinks about customer service, but you ignore customer service at your peril, I think. So we're starting with that kind of end in mind. A couple of things, as we talk about more customers, relationship management, those customers are going to become more and more important. And then, guys, it's execution.
Oh, that's wonderful. Wonderful. Well, Andrew and Stewart, and for everybody at Space Phoenix, thank you so much for joining us for this podcast interview. We've absolutely loved our time here, and we wish you nothing but the absolute best of success in 2026 and onwards. We're super excited to keep in touch and to follow along closely as you continue to grow and execute on everything that you need to do. But anybody who's interested in investing in or contributing to Space Phoenix, by all means, please do reach out, and we'll make sure to get everybody in touch.
Yeah, super easy. Andrew at space-phoenix.com, Stewart at space-phoenix.com. We make it easy. If you know our first names, you've cracked the code, so reach out. We'd love to hear from you.
Wonderful. Well, thank you all so much for your time. It's been a pleasure having you and hosting you on this interview. And to all of our listeners, this will conclude our interview with Andrew Parlock at Space Phoenix. We're super glad that you joined us and have stuck around for the entirety of our chat here. And we look forward to keeping in touch and joining you next time on the Space Times podcast.
Thanks a lot, guys. Really pleasurable.
Awesome. Well, again, thank you so much to Andrew Parlock. and Space Phoenix. We spoke with him for well over the 20 minutes we just got to listen to here. So that full interview and that full conversation will be made available later. So keep your eyes out for that. In the meantime, we wanted to get into some of the growing trends in the industry of effectively this effervescent problem that everyone has known has existed for decades, but nobody's been able to really sort of solve it, and nobody's really needed to really solve it yet. But the sheer magnitude of congestion and crowding that's happening on orbit. Space debris is causing major problems. We'll talk about that in a moment. There have been some sizable close calls and near misses this year, and we would really just expect the frequency and regularity of those near misses and close calls to increase as the number of folks currently on orbit and new launchers and players getting things onto orbit is going to increase. But let's go ahead and jump into it. Biggest on the list is that China successfully hit 90 launches in 2025. So the Guowang deployment continues. The Xingyan 4C heads to GEO, and LM-8A launched the 17th group of 10 Guowang satellites, reaching 136 of 13,000 in this state-sponsored Starlink competitor. And the Xingyan 4C is effectively it's a weather satellite. So China hit 90 launches in 2025, and they've massively increased the total capacity they have for launch and deployment. Very successful year for them. The
second most launches behind SpaceX.
Huge accomplishment. Granted, I mean, SpaceX is one independent, discrete effort, and we're sort of aggregating all of China's different launch efforts, but I think that's a fair aggregation. I think that's a fair comparison at this point.
Well, I think all 90 were long marches. So this is before they've even stood up their other capabilities like Land Space and Space Pioneer. So definitely expect to see more launches next year, but still 90 is, a huge number for them.
Very impressive nonetheless. But so the Long March 8A launched the 17th group of 10 Guowang satellites, reaching 136 out of the 13,000 that they're targeting to hit in sort of their Starlink communications constellation competitor. And the Xingyan 4C that was also recently launched is headed up to GEO, which is a weather satellite. So in the midst of all of this increase in launch and the increase in assets on orbit and players getting to orbit, SpaceX and Long March had a pretty close call, a near miss, if you will. So December 14th, I believe, but middle of December, the launcher almost collided with a Starlink satellite on its way up into orbit. And on, I believe, Friday, January 2nd, so first non-bank holiday of the new year, China spoke on the General Assembly of the UN, citing SpaceX as a safety and security risk to the space industry because they were so crowded. And on the same day, SpaceX themselves announced that they would actually be changing the altitude of about half of their Starlink constellation, 4,400 satellites, bringing them from 550 kilometers or thereabouts down to about 480 kilometers or thereabouts, which, honestly speaking, that's just about the low end of low Earth orbits. If you start to go any further than that, your vehicle needs to be moving so much faster that that unless you were launched and have your own specialized sort of propulsion solution in order to maintain that, you're going to just drop out and deorbit in its entirety. So, there's the potential that this move on SpaceX's part was in reaction to sort of a near miss, and they're trying to make a little bit more room and declutter things so that near misses like this don't happen. This could also be completely independent of the effort, but both announcements happened on Friday the 2nd.
Yeah, it could be related to that. They had another incident last month where one of their Starlinks deconstructed on orbit. So, they've already had a debris incident before, which would make more sense why this lined up so perfectly with China complaining about their near miss is that they were reacting more towards losing the Starlink satellite and generating debris from that
Yeah,
than close call.
I believe Maxar's successor caught that, didn't it? With
Yeah, the
Vantor?
Vantor image.
Yeah,
We covered
Vantor
that
Space
last month.
caught the imagery of the Starlink satellite, the flat sat,
Yeah.
deconstructing. I like that terminology. Um, but yeah, so either way, the satellites themselves, while fully controllable, driving too close to other players on the road, or the satellites falling apart and creating debris at those altitudes. Either way, things are very congested. And SpaceX has been one of the most reliable operators of on-orbit assets in the history of humanity. They've only lost, I believe, 2 satellites, and we just spoke about the second one. So major move on SpaceX's part, and this move coincidentally aligns sort of with their push for the direct-to-device market. So they have a lot of reasons to describe this as a feature rather than a bug. Oh, no, this isn't in reaction to something that went poorly. This is because we want to increase the power and the coverage, and even though this ends up reducing the lifespan of the satellites, it's still a net positive for our mission. So things are getting really, really crowded, and in effort to sort of ensure their own security and safety as they launch, China is accelerating their efforts to independently and sovereignly monitor space traffic. So they've started launching their second satellite constellation specifically aimed at tracking on-orbit objects. The Xingyan or Star-Eye network is designed to help commercial operators reduce collision risks while lessening the country's reliance on foreign tracking data. So again, currently tracking data is largely aggregated and is largely sort of a shared or common good. And China is wanting to sort of stand that up and get their own sovereign proprietary data stack for that, which means that, if the highest quality orbital data tracking data is stand up and is not a shared common good, we should expect to see other nations follow suit, and we should expect to see everybody trying to have sort of the best data edge in that capacity, just by the nature of a competitive market, so to speak. But so this Star-Eye network is comprised of 156 orbital sensors providing tracking updates every 30 minutes or thereabouts for global LEO coverage. And it's planned to be fully deployed by 2028. So a really ambitious timeline for them to get this infrastructure layer stood up and collecting all of the data that we need. It's unclear the level of granularity that this will cover. So there's still very much the likelihood that this is meant more for tracking cars and vehicles and less for tracking sort of loose screws on the road, so to speak.
It should be centimeter level.
To single centimeter level?
Like 5 centimeters, 10 centimeter. I think
5 to 10 centimeters is very impressive. I mean,
well, they have like every single type of sensor we've talked about for the past few months. Like, I mean, space situational awareness has been the booming topic. Like our last interview was with a space situational awareness company, ArcSec.
Right.
And we've talked about Mob Space, Odin Space, Remora, Starfish Space's Remora, Aerodrive's camera sensor, like all these different technologies. China's just putting them all in one spacecraft. So the fact that they have a wide field infrared sensor would indicate that they're taking large survey areas, but then having a multispectral sensor and electromagnetic monitors would mean that they're picking out areas of interest and getting more fine detail of it. So yeah, they've developed some system that's able to do broad and narrow tracking of material in orbit.
I mean, it's regardless the target use case, it's an impressive tech stack to put up on orbit. I think in practice we'll wind up saying that it'll be difficult for any one asset to service both of those needs simultaneously. So I would imagine that it'll wind up end up servicing the LEO side, more of the wide angle rather than the multispectral, the going broad and a little bit shallow rather than going narrow and deep. I would imagine is sort of where that first layer of the infrastructure is going to focus. But
Well, I'm just saying this because it's very similar to the PWSA Tranche 3 design. The wide field infrared is what they use for the fire control satellites, but then the command satellites have the finer detail multispectral images. So the fact that they're talking about this is like 156 satellite constellation makes me think they're treating this very much like a missile fire command control system, which would mean that it's more targeted towards rocket traffic control and satellite traffic control. But some of these electromagnetic monitors can get pretty fine details. So I don't know. They seem like they're just putting everything up there, and they're gonna figure out a way to just improve their system.
yeah, I mean, once you have the entire everything and the kitchen sink up on orbit, you can figure out how to optimize it later, I suppose. There's going to be some limitations to it, but yeah, I think that it's very clear that the true value out of this is going to be more than merely sort of debris tracking. There's undoubtedly going to be some security concerns and defense applications for this infrastructure layer. My imagination, my head immediately went to tracking other satellites and keeping track of where those assets are and what their orbits look like. But it could include very much sort of following with the proliferated war network. Very well could include some of the more persistent observation that's necessary to sort of track launches and track fire control. So great points there. The other big announcement that we have, or the other big development sort of pointing to how crowded things are on orbit, is that unfortunately, so SpainSat's NG II, which is on its way up to geo orbit, it encountered a quote unquote space particle that may or may not have already jeopardized the mission before it even got there. The incident occurred at about 50,000 kilometers altitude as it rose up into operational geo orbit, and could potentially put the entire mission at risk. So this was NG II, and NG I went up earlier. It was launched in January of 2025 and is currently operational. It represents a pair of satellites, a two-satellite project that was invested in by both the Spanish military and Hispasat, and was manufactured by Airbus and Thales, the consortium.
Yeah, I kind of laughed at the space particle aspect of this. I'm like, that's a weird. We know the word for debris, but then I noted that like they got hit at 50,000 kilometers. It's like, oh, they're not in Leo anymore. This isn't just debris from another satellite. This is like they got hit by a micrometeorite, which is very uncommon. The density of debris drops quadratically or squared power as you get further away from Earth. So it's very unlucky for them. But in any case, it's usually a hit to the solar array, which they're designed to handle losing a string of solar cells. So it usually doesn't end the mission. They're a bit hesitant to claim anything yet because this just happened. So fingers crossed it doesn't end the mission unless it hits somewhere in the bus and jeopardize the non-redundant critical payload system or something. They should be able to recover, but they're already talking about getting ready to launch a replacement satellite next year, which is kind of crazy given how expensive these satellites are. But I guess,
I mean, was this a standard GeoBus? Do you happen to know?
I think it was Airbus's standard GeoBus, but it was
Okay.
it was a military application, so I'm sure the payload was modified heavily for their applications.
Yeah, so best of luck to SpainSat. I hope NG II is functional, and that it's as far as getting hit by a micrometeorite goes, it is the least bad of all options, though the fact that they're already discussing launching a replacement satellite indicates that it's whatever the total impact is, it's sizable. So best of luck to them and the team. Super unlucky break on their end.
And good news for Europe. We've got some news coming out of the rocket companies. Hyperspace is looking for applications beyond launch for its hybrid propulsion technology. So they did receive 21 million euros in funding recently. We reported on that a couple months ago. That was for their launch vehicle and some hybrid hypersonic testing platforms. But as we've seen with a lot of other companies, they're starting to look at other applications for their hybrid propulsion technology. Reading between the lines, it seems likely that they're talking about missile technology, as that's what a lot of other companies that have talked like this are going for. That includes companies like Ursa Major or Via Space in America, or companies like Avio or Destinus in Europe. So this is kind of a common theme we're seeing amongst solid booster and hybrid rocket technology companies. It's a great business to add. It's a lot higher cash flow than just launch vehicles. Even as launch vehicle industry is growing, the missile industry is booming whenever there's conflicts in the world, which is why we're seeing growth in other companies like L3Harris Technologies receiving a letter of intent for a commercial contract to produce 60 Zeus hypersonic motors for Kratos defense and security solutions. Like I said, this is kind of a boom in that market. This represents an increase in production for Kratos defense of over 50% year over year. This is indicative of Kratos's rapid growth and execution towards their 1.45 billion Mach TB 2.0 hypersonic contract. Avio, which is another company we've talked about recently for missile application, has now received 2 launch service agreements. So now there's some growth in their launch service business. So they build and operate the Vega C launcher. They also provide solid boosters for the Ariane 6. But these 2 launch service agreements are for a Vega C launch for both a European and a non-European customer. These satellites are planned to be Earth observation, environmental monitoring, and resource management satellites for civil and scientific applications, going into a 500-kilometer sun-synchronous orbit, which is pretty common for Earth observation satellites like this. The total value of the contracts is likely over $100 million euro to secure the launches between 2028 and 2031. Kind of rounding out the news from the space launch providers in Europe, we have Spanish launcher PLD Space poised to receive 169.1 million euro in funds as part of the European Launcher Challenge. This is a contract vehicle that we mentioned last month that the ESA set aside for during their ministerial meeting. It was planned to go out to all the launch vehicle companies in Europe, which they shortlisted as ISAR out of Germany, Rocket Factory Augsburg out of Germany, PLD Space out of Spain, Maya Space, and Orbex, which I believe are out of France. The total value of all these contracts is 902.16 million euro. So it's being fairly evenly split amongst the 5 launch vehicle companies that they've targeted.
Yeah, speaking of launch, in addition to the European Launcher Challenge, there is a large influx of capital entering the launch market. So Landspace, the Chinese company and launch provider of the Juke 3, the ZHU QUE 3 rocket, has gotten approval to file for an IPO on the Shanghai Stock Exchange. So they're going to be raising 7.5 billion yuan with IPO, and it's a big development in the Chinese launch ecosystem and reflects sort of their unique playbook for leveraging both state and commercial support for their program to great effect. Most recently, the Landspace's Juke 3 rocket deployed its second stage successfully to orbit, but was unable to successfully recover the first stage on their, I believe, December 2nd, 2025 launch. Additionally, Japan's Ministry of Defense selected a team led by Synspective and Mitsubishi Electric for a constellation aimed at persistent imagery intelligence. So at the end of the day, what they want is persistent, always overhead, even though it's not via a geo, because it's an Earth observation project, but they want persistent, always overhead, always available synthetic aperture radar and Earth observation data and intelligence. And that just sort of continues the trend that we've seen over 2025 of SAR and EO asset classes in and near conflict zones on a global scale being really important.
Yeah, I think it also like plays well into what we saw last week with the Mitsubishi failure on the H3 rocket. That definitely seems like an increased effort by Japan to build up their own sovereign capabilities, which they're well equipped to do, and they're moving at a rapid clip across all the verticals of space industry. So I know Mitsubishi is PNT, this is Earth observation. So good on them.
Great progress out of them and starting off the new year strong, absolutely. Additionally, so we spoke about CACI last week, and how they acquired ARCA for a couple $2 billion to help flesh out some of their product capabilities. Looks like they're already starting to execute on that and convert that acquisition into a couple of contracts here. So they just received a 5-year task order worth up to over $200 million from the U.S. Space Force. So congratulations to them, modernizing some of the Space Force's network infrastructure. And additionally, a Space Force / SpaceX partnership centered on the MILNET program, a 480 satellite constellation, was announced this week. That satellite constellation, it sounds like it's effectively a unique application of the Starshield technology. So maybe it's a unique and completely discrete effort, but it might be sort of a separate carve out or breakout for MILNET's applications, using the same sort of Starshield capabilities and technology stack. Additionally, in commercial news, so Space Cadet Ventures announced and started deploying out of their second fund, investing $500,000 to $1 million checks into seed rounds. Space Cadet Ventures is one of the few marketing VCs out there that brings an explicit sort of differentiation through their marketing and PR capabilities, and they bring all that to the deep tech space, investing in hardware space companies and other AI tech stacks as well.
So for tech advances, we have one announcement that kind of falls outside of our main topics or business moves, but it's a really interesting one. Zenno Astronautics has been awarded a contract by Germany's Federal Agency for Breakthrough Innovation to develop a new generation of autonomous satellite operation software enabled by their Super Twerker technology, which flew late last year aboard Impulse Space's Mira 1 or Mira 3 on board that was launched on board TR-15. I hadn't heard any news about their technology working, but this seems to be anticipating that it does, which is a fair assumption. It is a relatively straightforward technology. It is novel in the sense that nobody's launched superconducting materials to space for this application. Effectively, it's taking a pretty standard technology, which is a magnetorquer, typically used for momentum dumping reaction wheels. So once the reaction wheels that are used to control the attitude of a spacecraft spin up too fast, the magnetorquers essentially hold on to Earth's magnetic field as they spin back down so they can be reused. In some applications, you can use them to actually steer the spacecraft, but the force is so small that the mass trade-off is usually not worth it. By introducing superconducting magnetic material into the mix, you are able to generate a higher magnetic torque with a lower mass, which kind of breaks that trade-off and makes it start making more sense. We haven't really seen this done on orbit. There's been some other technologies that have kind of played around with the idea. such as the EM drive, which we've mentioned a couple of times, and is kind of the I don't know what to call it, a joke, a unicorn technology. It's like this ideal technology that's a fuelless propulsion unit for space, which is kind of the holy grail. That's the word I'm looking for, the holy grail of propulsion technology in space. But it's been many times over debunked as breaking the laws of physics. You know, you need fuel in order to conserve conservation of mass. What they did find during testing was that the large copper cauldron that's used to as the kind of as the main component of that thruster is actually so large, massive, and magnetic that it was generating its own magnetic torque against the magnetic field in a way that you're generating linear force upon the spacecraft. So effectively generating, you know, propulsion. But again, the trade-off with mass is so high that nobody would want to fly a giant copper cauldron for the amount of force that it's generating. But what this contract is implying is that they can use these super torquers to do near field operations. So it's specifically targeted for RPO capabilities, autonomous RPO capability, which, if possible, makes a lot of sense. Having a fuel-free capability of steering and moving a spacecraft around using just these super torquers unlocks a whole bunch of possibilities. So I really hope that some data comes out about their tests last year that kind of back up this claim. Because if it does, this is a huge revolutionary change in how this operation is performed. We've talked many times about RPO. It's one of the emerging critical needs of the space industry as, you know, adversarial space space becomes more contested and there's more adversarial encounters in space. But also for things that are pretty standard, like berthing, docking, which are needed for habitats, which is a growing market, as well as refueling, which is also important if we want to become interplanetary. So the idea of having this fuel-free, magnetic, easily controlled on and off kind of capability to do this sort of new near field operations is really exciting. And I wish Zenno Astronautics well. They're one of few Kiwi companies working down out of Auckland. So hopefully this is a boon for their space economy as well.
Interesting that a company out of Auckland would win a contract from
Germany
agency. But, you know, if they've found Herman Melville's holy grail, then I say let them have it. That's fabulous.
Let them have it.
I mean, I would have thought the whale ate the grail, but what do I know? Well, for all of us here at the Space Times podcast, that's going to do it for this week's episode. Thank you so much for joining us. We had a great time starting off the new year strong with everybody here. As always, my name is Paul Mayer here with Harrison Lambert. A special thanks to Andrew Parlock and the team at Space Phoenix. Our full conversation with Space Phoenix and the team will be going live today and will be available on YouTube. As always, please drop us a comment, check out our socials, and follow us on Spotify, Apple Podcasts, YouTube, or wherever you are receiving this signal. Until next time, this has been Paul Mayer and Harrison Lambert signing off for now.